Sir Paulo Gomes, it's amazing to meet you here. And thank you for honoring us from the Cfta perspective. I will not speak to your CV. It's worthwhile for the people to read it personally. I think what is most important is to realize that you have worked for African or Pan-African banks such as EcoBank. We have a problem, and that is how do we quickly move to the value of Cfta? And you're here to build us. How do we move from regional economic communities to the Africa Continental Free Trade Area? How do we get the data system and information communication systems? How do we get the financial structuring and movement of funds? How do we get the quality assurance? I know there are so many things, but if we don't get the market infrastructure right, it will be very difficult for us to see Africa build its internal or intra capacity for trade. And we know that is where its power lies, in its population, in aggregating its needs, in financing those needs, in reducing the cost of capital, especially working capital for most of our farmers, is in seeing how we can break down the borders. And over to you, Sir Paulo Gomes. Well done, and your experience is so crucial here. Most welcome to speak to us, sir.
Thank you, Dean. This is I'm really happy to be here. I want to take just 5 minutes to be brief and give room for Q&A. As you mentioned earlier, I'm from Guinea-Bissau, and the leader of our independence, people used to ask him, you know, why do you want independence when he was conducting the movement? And he said, I just want my people to be free, to live in dignity, and to be able to raise their kids and their family in peace. So it wasn't a big, ambitious agenda. There was just an issue of urgency for his country to be free and to grow and to develop his country. And so one will ask also, why everybody's pushing about the Cfta and the free trade agreement? Well, it's very simple. There's a sense of urgency. Our founding fathers have managed to dream about it. I mean, from Nkrumah to Cabral to Haile Selassie. But we needed to put this in practice. And although someone said that before the facts comes the dream, I think after the dream from our founding father, we need to implement this. And there's a sense of urgency to implement it because we are under pressure to create job for our youth, for our population. As you know, the statistic flags something in the region of 20 million jobs to need to be created every year in Africa to absorb all these youth that are coming into the market. We have this democratic dividend, which is a huge opportunity, but it's an opportunity if you create job. And also this crisis has shown us, the global pandemic, that you need to have a caution in your own economy to be able to sustain an external shock. This world economy has been put into a coma through this pandemic. And we saw how we were basically left on our own. Each country, each continent was taking care of its own people. If you see the recovery, mechanic that has been put in place in a country like Japan, 20% of the GDP. In the US, I think close to 15% of the GDP. You had all this helicopter money that was sent to everybody. And we didn't have the means to do the same because basically we have not managed to create an economy in the continent in order to sustain and to be able to sustain that kind of a crisis. I think the Continental Free Trade Agreement gives us that opportunity. It's not going to be an easy goal, but it's important to have this goal and then put the building block to reach that goal. And also, I don't think it's going to happen in one shot with all the countries going in the same speed. Some country will go faster, other will be slower, but that's how things should happen. That's things happen when you are realistic. The good thing with the CFTA, and it's important for me to put in this context, is that we have now a secretariat in Ghana with a very dynamic team. You have a very young secretary of the secretariat in Ghana, very dynamic, and discussion and negotiation are moving. As you know, they are now basically, in terms of the rule of origin, 80% of I think most of the product that we basically agree. You still have now issues on the rule of origin for automotive, textile, and a couple of other things. But by and large, people are agreeing on the rule of origin. We will create the platform for the made in Africa. So that's the context. You need that. And also, as I say, for us, the CFTA, it's a Pan-African security issue, because if we don't implement it, we're going to be in a very deep trouble in terms of our ability to create the economy in Africa, the Pan-African economy that will generate enough job for the youth. It's that simple. So we have to have that mindset altogether and share that sense of urgency. I'm very happy that the discussion today on the SMEs is quite focused on agribusiness, because I think for me is the first layer. Again, as I say, you will not implement the CFTA in one shot. You have to be gradual, and gradual in terms of the countries, but also in terms of the sector. And I think the first sector we should focus to create the value chain is agriculture, is agribusiness, because where most of the job will be created is also about food. Whatever happened in the world, we need to eat. As we saw also that health was very important, and two important elements of the economy of life was health and food. If you have these two, even if we made mistakes in other sectors in the continent, I think our people will be able to be resilient and then create the condition to move forward. How do you quantify those SMEs? I have heard in some of the discussion, statistics show that, most of our SMEs have between, I think, 11 to 100 employees, but we have a lot of micro enterprise with between 1 to 10 employees. And those are the critical mass that are creating job in our countries and enabling people to survive. So I think it's important, once you quantify those and you focus in a sector like agriculture, and then you help create the value chain along the sector, to see also how the issue of access to capital, it's important. Access to resources, to credit. I will just give you an example. If you look the ratio credit GDP in Africa is 30% compared to 70% in Latin America and 100% in Europe. You need to inject much more resources in our economy, and the credit, it's key. It's a lifeblood. You have the transaction, which is the building block, but you need credit. So I think on that, we have realized that the banks, the classical banks in our countries, won't be able to do it. They are doing their job, and you cannot ask the commercial bank to do miracles. They're facing also challenges in terms of the central bank rate. But this shows that the countries will have to be much more proactive in a partnership with the private sector to inject more resources into the SMEs. And there will be risk. I'm not saying that there's no risk. There's a risk that some of the money will not be spent properly. The mortality rate of SME, we know, is big everywhere. It's big in the US, it's big in Japan. But the state need to take that proactive role to inject more resources and not expect only the market to do it through the banking sector. We need to go for other type of institution, and that's why it's important to provide resources to incubators, to accelerator of incubators, because this is where you will inject resources and make sure that there's access to money to financing for people to be more entrepreneurs. And again, I insist, this cannot be led just to the market. There is a role here for public and private partnership to inject more resources for that. And then you have access to market. This is where the Cfta again comes in. You need bigger markets. I was talking to someone earlier. My country is just 2 million people. Is it reasonable to have? Is it really an economy that you could drive with 2 million people, or do you need a bigger market? And I believe you need a bigger market. And that's why this major mistake has been made to cut African continent and country in pieces. Unfortunately, we have that. We are not going to go into an episode of trying to redesign the borders from the colonial period, but the best thing to do is through regional integration to erase those borders and then create market for people to be able to sell product, and essentially agricultural product. People talked about protectionism, about African countries in between them. Yeah, it exists in some manufacturing product, but when you look at food, in most of the case, in agribusiness product, you don't see that protectionism between African countries. When you produce something in Benin, I don't think it's going to be a big challenge to sell it in Togo or in Nigeria or in Ghana. And I think that's where we have to put the big emphasis with the incentives that can be provided for people to be able to produce more, and the market will be there. So I think, as I mentioned, it's a sense of urgency for regional integration. You need to create value chain, and the value chain that we need to focus is precisely the theme of this conference is in agribusiness, but you have to make sure that there's access to finance, and access to finance will not come through the classical medium of the banking sector. You need to create new platform for injecting more resources, and then obviously the issue of the market. And I think the technology, and this is where Kenya comes in, being a country of innovation. If you see what can be done in terms of agri-sharing economy, to just give you an example, I think it's estimated that there is only 13 tractor per hectare of arable land in Africa. The number of tractors that you use for each hectare, 13, compared to a global average of 200 tractors per hectare. So you see here, we can create an old economy, a share economy. Some people will call to Uberize the farmers by creating conditions for people to have access to those equipment in a Uber type of mechanic. And I think that's an opportunity where technology can help do that. So farmers could have access to, in a shared manner, of equipment and other products for agriculture and develop agribusiness. So I think your leadership in terms of technology in Kenya, and you were mentioning earlier the role that Kenya can play across Africa, I think with your innovative entrepreneurship mindset can be a huge input for pushing for agri-sharing economy, which I believe that could complete that value chain of agriculture. So I think I will stop here. I wanted just to map out, again, the urgency and the different tools that we could put in place, and the context that we have now, a context where we're doing a recovery from the COVID. This recovery will require really having a Pan-African approach to push for implementing the Cfta. So I will stop here, and thanks again for the opportunity, and open for the Q&A.
Thank you very much, Sir Gomes. And maybe I'll give Dr. Njenga just the first reaction. Any question and any reactions to Sir Gomes? Dr. Njenga?
He has hit all the points. Very, very well said. First, the gradual process of a Cfta, then the mechanization. I think the question of technology in agri-production is a very crucial issue. The integration of the markets, that is a very difficult issue, but like he has said, we can gradually do it. One of the core issues I find very important as a quick gain is the integration of all our telecommunication, mobile money platforms and the data that they provide. This is a very crucial area for us to have a quick win. It's a low-lying fruit. If we stop just competing for the sake of profits, if MTN, Safaricom, Vodacom, and all the players within the continent were to integrate their money, resources and data and provide platforms of resources, just like we can see Safaricom is trying to do here in Kenya, that's a low-hanging fruit because we have a financial channel and we have that. Then technology will come afterwards because people will now want to produce as much as possible for the sake of Africa. But the question remains, are our political players, what's your opinion, Sir Paul Gomes, and you're very experienced in this. Are our political structures and players ready? Or is it just lip service and then they will sell their countries for the lowest bidder across the financial sector? Thank you for that. I leave it there to you.
Good. I don't know if you, Maggie, want to do the Q&A so I can bundle the
yes, and yes, thank you. And what we can do, Rosemary, I think Maggie Tessie may not be with us. And so Rosemary, you could float maybe one or two other questions. In the chat, we've been receiving a lot of reactions, and given your own background, Rosemary Okello, our director at the Africa Media Hub, you can do the same. I also want to ask, we specifically have from our Bachelor of Commerce program, the two class leaders, Monsieur Jean-Pascal Kagawa and Speciosa Sambo Mngerenyi, and we also have Rakeli Kuria and Diana Owor. We've got Favor, who's going to be in one of our channels later, Rohio, on behalf of the Africa Young Trade Professionals. You can type your questions in chat and we can see if we can fill those. But Rosemary, any questions that you've seen or anything you'd like to ask Sir Gomes?
Yes, Sir Gomes very eloquently put, and I'm seeing very many reactions coming in. And thank you for just highlighting the opportunities that we gain as Africa gain to actually achieve, especially when it comes to SME from the Africa Continental Free Trade Area value chain. I just want you to just reflect back that as a continent with 1.3 billion and 55 countries and 30 million and resources that are great, and you talk of how we can be able to actually agro-sharing to gain our economy. What are some of the challenges from your perspective that are you seeing the continent is facing? Because as Dr. Jacob said, we try to politicize so many things. Policy perspective has not been actually integrated. When it comes to access to credit has been a challenge. And as somebody who has come from private sector, what are some of the things that we can actually deal with to break the barriers for the SME, which who everyone acknowledges that is the engine for the economic recovery for Africa in post-COVID? Thank you.
Yes, I think you need on our leaders. I think we have all realized that you cannot leave such a serious agenda only to our leaders. And that's why many of the actors are also engaging in this process. I mean, our leaders are facing an election to another, and unfortunately, sometimes I focus on the next election, which means that the focus on the policy implementation are very quickly out of the radar. But the good news, again, when it comes to the architecture of the African Union, you could see the African Union has at least agreed to have a secretariat, which is linked to the headquarters, but has the flexibility from Ghana to be much more agile in engaging the private sector and the other sectors for the implementation of the CFTA. Secondly, the CFTA will have strong chance to be implemented if you have also African multinationals. African multinationals, and you have in the banking sector, you have in insurance. Unfortunately, I think you need much more on agribusiness. Those multinationals could also give opportunity to small enterprise because they will create conditions for the demand coming from the small and medium enterprise for service and contract. So I think we have to encourage the African multinational, and this will require providing incentives to those African firms to grow from Kenya to Uganda and mingle with those economy. And this is another layer that could erase those artificial boundaries from the colonial period. So multinationals, African company. And we need capital. There's no doubt that if we don't inject more resources, I was giving you the figures, 30%, the ratio credit to GDP, 30%. You simply cannot transform an economy with those low ratio of credit to GDP compared to, again, 70% or 100% in Europe. So we need to inject more resources, and there will be a risk. Again, the mortality rate of SMEs, we know, is huge everywhere, so there's no exception. And we shouldn't have it as an African problem because it happened in other countries. But those injection of resources, many will survive, many will die. But I think that's why the state has to step in a transparent manner to provide the additional liquidity. As you see, I mean, look at what happened with the recovery of COVID in Europe. They haven't hesitated to do a huge recovery program at 10, 20% of the GDP in just a fraction of 6 months. So it shows that when there is a sense of urgency and there is need to do something that can be transformative or at least protect the country to fall, you have to step in and put that resources. So that's my huge encouragement, that only doing it through the platform of the CFTA. And I agree, the challenge is leadership, but the good news is that the stakeholders are now getting into the implementation of the CFTA and have agreed not to let it only as a state function, because it's too serious and too urgent to be left alone to the government to implement it.
Great. I don't know how much time we have, Martin, because I'm seeing so many questions coming in.
Yes.
Giconyo was the first one. Paulo, you have nailed it on regional integration in value. Regional integration in value chain and access, affordable and financing. And you talk actually access to finance. What are some of the also policy that private sector needs to do to make sure that there's that financial inclusivity, especially for the SMEs, to make sure that the value chain, they produce a product that is competitive to the global market? In response to Betty Giconyo's question.
Yeah, so what the private sector could do, specifically the private sector, or is it the public sector?
A private sector, especially you talked of the access to credit, only 30%, while other countries is 60 to 70%. And private sector has been actually looking at SME like they don't have enough collateral for them to be able to be given credit. So what are some of the key indicators for financial inclusivity that SME needs to be given in order to actually operate effectively in the global market?
Yeah, I think, I mean, there are some best practice, and I think I'm sure through the university, I've seen some of the best practice aspect to say the conducive environment, the tax, I mean, the facility to register business. I mean, you have those, the classical ranking indicators, but when it comes to practice, you know, on the ground, the issue of the capacity, the management capability is something that can be provided to support the SME. And this has nothing to do with the access to funding. I think that, you know, whatever the enthusiasm and the passion of some of the entrepreneurs, they need capability. I mean, you don't you need to be coached, and then that aspect, non-financial support that can be provided. It can be done through some of the state facilitation entities, but I think through the private sector, they can also create conditions to organize themselves to support in terms of management capability. I think the access to market, that you could see in many of our countries, some of the service that can be given to SMEs. There's nothing wrong from the state to say, let's say in terms of providing food to the army, we'll do it and create conditions for SMEs in the country, local SMEs, to benefit from that, or to be provided some specific incentive for them to provide those services to the army. It can be the same for the hospital, for example, in terms of food and things. So those are the things, are strategy to create job and create opportunity that cannot be left only to the market and say, okay, the market will take care of it. So those are a kind of a specific incentive and initiative that can be implemented. And that's why I say in the nature of a partnership between the public and private sector to provide those opportunities to the SMEs. So it's almost like creating the market for the SMEs. And there's nothing wrong for us for the state to do that, so long that the rule of the game are clear. There's risk, no doubt, because it looks like picking the winner. But if you don't create the market for those SMEs, I don't think that you will see those opportunities to be materialized.
Thank you. I'll hand over back to Martin to ask the next question. But the issue of value chain is still a key issue here, especially when we produce the raw materials and when they brought back to us, we buy it at very expensive. So the value chain of the SME products and how that can be done, especially in an innovative way, and so what are the innovative approaches we need to have? Martin, back to you.
Yes, thank you very much, Rosemary. Actually, in the interest of time of the program, Sir Paulo Gomes and Dr. Njenga is still here. I think we also need to release him for another commitment. There's a lot of excitement that is already building up. And Sir Paulo Gomes, I think you've inspired. Between AfroChampions and Strathmore University, I think there's an opportunity to keep these conversations going. So maybe you can make one comment, a final comment. Next, we're going to have Professor Wagura Nderito. Professor Nderito, I request maybe if we can keep it to 6 minutes. And I'll use this all as a segue to our first panel. And I see several of our panelists are here. It's a very esteemed group. I see we've also been joined by Professor Aro Marwanga, who's the chair of the board of the Kenya National Innovation Agency. He'll be featured in one of our later panels. We've got a lot of heavy hitters in the room, and a lot of what you've said has resonated. So Paulo, maybe you can give just one response to the question Rosemary has raised on value chains. And in Dr. Njenga's presence, after this conference, where do we channel all this excitement? And can you give a shout out within all your networks, let them know an exciting conversation is happening in Kenya? And we're also privileged to have representatives from the Ministry of Agriculture, the SME advisory unit. So a lot of the ideas you share through the policy process, I know they will make all their way to the design phase and ultimately implementation, monitoring and evaluation. The floor is yours. In a minute or two, some closing thoughts.
Yes, I think I will be open to exchange by email with some of your students and some of the other panelists in order to give space to others. I think we're quite constrained on the time. But on the value chain, again, it's much more easy to kind of narrow things to the agribusiness. And you can take some specific example, like in the poultry business. How do you create value chain in the poultry business in a country? How do you give opportunity to SMEs that involve in the value chain of the poultry, for example? And how do you create market for that? You see the amount of chicken that we import every year in our countries. If you manage at least to create a solid value chain around that particular business, and you plug SMEs with funding, you will see the amount of job and opportunity you will create. And this is not protectionism. It's about at least testing the water with a concrete product, like in this case, chicken, in a value chain from, you know, the maize, the oil product you need to create in order to feed the chickens and also to find a way to sell it in the market. And most of the case, this is a fresh product. It's not those that are frozen for 5 to 10 years in Brazil or somewhere before it comes to our countries.
Thank you very much, Dr. Njenga. On behalf of my business model creation evaluation students, my business planning students, my entrepreneurial leadership students, they're about over 200, as well as the Africa Young Trade professionals, our former students who've gone out and are trying to engage the globe. You are our leader. We want to continue the conversation with Sir Gomes, all these interesting ideas. A parting shot, and then we go to Professor Agura in our first panel.
The last SME, I said something which turned out to be true. The word is integration and aggregation. We have succeeded in integrating the poultry value chain in a big way here in Kenya. Sir Paul Gomes has mentioned that. We are in the process of looking at the livestock, the textile from cotton to ginnery, all the way to fashion design, and to look for a general fashion design going around. Look, you cannot integrate all the value chains. Therefore, what we are trying to do here is to help all the attendants here and those who design policies for the Cfta, and especially at the agricultural level in a particular, that it is a matter of many players joining hands with one vision. The more players we have, the better. In a free market system, it is many people who bring about the common good and who bring about the market systems. Therefore, we are not going to think of an integrated system of one policy for everybody. It's about all of us doing our little part in generating an integrated trade in agriculture in Africa. If Nigeria, for instance, needs milk, if it needs poultry, if Central African Republic needs livestock, it needs maize, it needs this and that, what will happen is that if there are players who know of this need, they can start helping out. And you will see how the market system reacts to it. And then the financing organizations will come in, and I agree, they can't do miracles, but suddenly they can help reach out to that market. Thank you, Paul, and it is great. It was great hearing you. And now I have also to leave. I thank you very much.
Thank you very much. Thank you.